Good evening and welcome to the special webinar hosted by Fires. We are thrilled to have you all here today. Our speaker today is none other than Sharik Samsuddin, the founder of MarketFeed. For those who may not be familiar with MarketFeed, it's an innovative app that teaches people in India how to trade stocks. The app is backed by Y Combinator, a prestigious startup accelerator program that provides support and resources for promising startups. Sharik has gained a massive following due to his highly informative and engaging content. With over 1 million subscribers on his YouTube channel, Sharik has become a trusted source of information for those looking to learn about the stock market. We are honored to have Sharik join us today and share his expertise with our viewers. Without further ado, let's give him a warm welcome. Welcome to the webinar, Sharik.
Yeah, hi. Thank you very much, Vignesh, for the wonderful introduction.
Glad to have you here today. Viewers, just before we begin, for those of you all who cannot attend the entire webinar, not to worry. This webinar will be available to watch once again on our Fires YouTube channel. And for those who have questions, feel free to use the Q&A option in Zoom, or if you're watching this on YouTube, then use a live chat feature. We encourage you to ask as many questions as you'd like, and we'll do our best to answer them at the end of the session. Once again, thank you for joining us. I hope you find this webinar informative and engaging. Over to you, Sharik. The screen is yours.
Sure. Thank you very much. So I'll just take it forward from there. I'll try my best to keep this informative. And as I always do, I'll try to make sure that I give you a strategy which actually works, right? So if you know me or if you even do not know me, I am mostly an option seller, that too a positional option seller. So I'll try my best to give you a strategy which I've been trading for a very long time, which actually works and with which you can make nearly 1% profits almost every single week. So that is what I try to do. I try making a 1% profit a week, so that over the entire year, I try to make nearly 40% profits every year, right? So that's the humble thing that I try to do. So I see there are a few people from the community here. I'm just looking into the chat. I see Manjit TS, I see Shiva Prasad V. So thank you everybody for being here. Before I get into the session, thank you Fires for being so wonderful and kind enough for me to conduct this session as well, right? But more importantly, I'll say that I've been trading on Fires with almost my entire capital. I've been a powerful Fires user for the last nearly 1.5 years. So to be associated with the brand like this, with a brand where I actually trade and to conduct a session for them, it's absolutely amazing for me. So really thrilled and happy to be here. So again, thank you, Fires team. And also thank you all of you who are here, either during the live session or even if you're watching this later. Thank you for being here, taking time out and listening to me and to know the strategy. So there's only one thing I would say before we enter the session. Only one request from my side to you. I'm actually going to give you a strategy that works. My request to you is, once you understand the strategy, once you learn the strategy, try trading the strategy with some amount, with whatever minimum capital which is required to trade the strategy. My request to you is, try trading the strategy at least for 2 to 3 months. Now, that is the largest mistake I see most of the traders do. The largest mistake that most of the traders who are trying to get into trading us, that they'll see some strategy somewhere, they'll try to trade it for 1-2 weeks, maybe some week it is in loss, then they'll try to jump strategy, go to a new strategy. So my single humble request to you is the fact that I'll give you a strategy. Please take it if you're interested, if you feel it is good, which it definitely works, right? So please take it and try trading it for at least 3 months and then feel the power of the strategy, right? So that's one humble request. Even if it is not my strategy, if it is some other strategy that you're learning, please make sure that you keep doing the strategy, keep trading the strategy at least for 3 months. Give it some time to understand how it will perform across different market cycles. Cool. So if that's the case, if you agree to that single request and condition from my side, then let's get going, right? So I have a simple presentation because we're actually going to learn a strategy, right? So we will need this. So let us actually get into the presentation, right? So let me start presenting. Cool. I hope my screen is visible. Everything is fine. Yeah, I'll also be looking into the chat section in between to make sure that I try to answer questions in between also. And I think the team is also looking into comments so that towards the end, if there's some relevant questions, I'll be taking all of those. Cool. So yeah, let's get started, right? So I always almost start all my sessions with this, which is perspective. Yeah, cool. Sorry, which is perspective, right? So when I say perspective, what I mean is a lot of people come to trading with a different perspective than what I actually want them to have. For example, I see a lot of people coming into trading with maybe 50,000 rupees capital, and their expectation might be to make 5,000 rupees a day and maybe make 30,000 rupees a month. Correct. Now, this is a very common thing that I have seen. When people hear the term trading, they associate the word trading to making a lot of money. But I don't think that is right. That is my perspective. Right. So if you think about it, with 50,000 rupees capital, if you can actually make 5,000 rupees a day, what is the ROI there? Return on investment on a daily basis. It is 10%, right? 5,000 divided by 50,000 is 10%. So that is 10% ROI a day. Now, if someone can do that for the entire year, say there will be a good profit making days, there will be loss making days, there are nearly 200, 250 trading days in a year. So put together, they're telling that they'll make 2,000% ROI a year. Do you really think that is practical and doable for the masses? There might be exceptional traders doing that, one or two in lakhs. But if you look at industry average, if you look at industry standards, let me tell you this. Who is known as the best ever trader in the whole of the world? The best trader in the world, If I ask best investor in the world, probably the answer is Warren Buffett. Who's the best trader in the world? Who's at least known as? Yeah. So Jyoti Prakash Anandan is actually giving the right answer. Yes. Jim Simons. You can Google about him. Great trader, amazing person. So Jim Simons, over many years, his annual returns from trading is 66%. Yeah, Pankaj Saini is saying 70%. Correct. So let's say 60 to 70%. Right? Oh, Abhijit is asking Jesse Livermore. No, yeah, even he is great, right? Amazing. So, yeah, so 60 to 70% a year is good. So then whenever I speak, I say 60, 70% is the best in the world. So let's at least try to make the half of it. Because in India, if you think about it, 95% of traders are losing money. Anyway, so 95% of traders are losing money. So for us to be in the top and to at least match in the international standards, I say, let us try to make 35 to 40% ROI a year. Good. If we try to make 35 to 40% ROI a year, I think that is amazing. I think that puts you in India's top traders. And that is what I try to make. And that is what I've been consistently able to make over the last many years. I'll even be opening my PNL in FIRES and will be showing it to you. I'll be showing FIRES verified PNL also in the session. So yeah, Abhijit is saying 24%, I would be ecstatic. Exactly. Now, those are the kind of people I would like to talk with, right? I actually don't know how to trade with 50,000 rupees and make 5,000 rupees a day. If you're trading with 50,000 rupees, let's try to make 500 rupees a week, right? And the game is when you increase capital. So when you increase capital, you can make more money. But I always want you to think in terms of percentage. I want to try to make 1% of my capital as profits after charges every week. Mostly in profit-making weeks, I'll try to make 1% profit of capital. In a loss-making weeks, I'll try to limit my loss also to 1%. And I'll try to keep my win ratio very big. So that in 52 weeks in a year, right? 52 weeks in a year, I'll try to win 40 to 45 weeks. So I'll be making some 45, 50% profits in the winning weeks. And in the rest of the 7 weeks, I might lose money. And in the losing weeks, let me lose 1% per week. So some 7-8% I'm losing there. So put together, I want to make 40% profits a year. If that is what you are interested in, welcome everybody, right? This is where I'm welcoming, because I see that perspective is very important for you to succeed in trading, to easily succeed in trading, let me tell. Because the way I trade, the kind of strategy I'm going to teach you today is very easy, it's very practical when your perspective is right. But if your perspective is not like that, if you're greedy and if you want to make much higher returns, then my strategy wouldn't work. Then you would feel that, hey, this strategy is not giving money. Let me go for other strategies. Then that wouldn't work for you. Then you'll go for other strategies. And eventually, probably nothing will work out for people. And this is what I've seen over my years of talking to people, right? So you will win in trading when your perspective is right, and when you find a strategy which matches with your perspective, and when you keep trading that strategy for a good amount of period, right? So that's that. So Nitin is asking, is it max 1% per week one should expect? No. If the week is good, if the market is supreme, right? If the market allows, there are weeks where we can make 2% profits also. But that's it. Cool. So that's the perspective. I see option selling as a professional business, a business where I need to have only capital and I only need to know something about trading, nothing more. I don't have to manage employees. I don't have to manage inventory coming in. I don't have to manage customers. I don't have to manage other stakeholders. I don't have to manage any other tension or variables associated with the business. It's just my money, my broker's account, my laptop, me sitting and trading when I want to. I can choose not to trade when I want to. I have all the freedom in my life. I get to make good money, and the variables, the risk variables of failures are also minimal. And that is the amazing business that option selling us. I see a lot of people, when they have some money in hand, say 10, 20, 30 lakhs rupees in hand, I see those people as to, hey, what should we do this business with this money? I see that those people actually open a restaurant, maybe open a brick and mortar store, take a franchisee of something. I see people with 20 lakh rupees, they start some business with all the headaches related to a business and with very less ROI. And my amazing advice to all of them is, if you have 10 lakh rupees, you can easily start selling options. You can try to make 30 to 50,000 rupees a month. Good, no? Without all the headaches and tensions of actually running a business. So that is the perspective that I really live with. And if you have the perspective, I'm sure the session is going to be wonderful and amazing for you. So in today's session, I'm going to talk about how I went from trading 1 crore of rupees as capital to my strategies being deployed in funds over 120 crores, right? So that is what we talk about. I'll actually talk about the journey. I'll talk about the foundation of the strategy. I'll give the foundation for free so that you can actually start trading that strategy, or you can even make it better using your trading knowledge. Right? So in today's session, that's what I'm going to do. I'm going to talk about the strategy which gave me consistently 50% profits over the last many years. I'll be telling exactly everything about the strategy, and that is how I could scale up my trading. I hope you're excited. Yeah. So with the strategy I'm going to give you today, with the exact same strategy, I've generated over 100% ROI in the last 2 years. Financial year 21-22, I made over 50% ROI. Financial year 22-23, I made another 50% ROI. So for the last 1.5 years, I've been trading with FIRES, right? So I've been trading on FIRES for the last 1.5 years. So this is my FIRES backend, if you can see. So I'm just refreshing my FIRES dashboard. And if you see, this is verified PNL. I'm going to previously shared. And if you see here, if you see the time period here, this is from 1 April 2022 to 30 March 2023. And the PNL was 1 crore 39 lakh rupees. 1.39 crore rupees is how much profits I made in the last financial year. The starting capital, again, I'll be very honest here. The starting capital was, right? The starting capital was 2 crore rupees. So after the 2 crore rupees, then this is the profit which was made, which translates to over 50% ROI, right? I mean, I started with 2 crore capital, then it went up till 3 crore capital. So in between, I would say the average capital deployed in the year was 2.5 CR, and this was the profit which was generated. So I'll tell the ROI is over 50%. So that is what happened. This is how I've been trading, and that strategy is what I am going to talk about today. Cool, amazing. Now, this is the content, table of content, if I might put it simply. Number one, we'll talk about option selling for 50% returns in annum. We'll talk about the strategy, everything in detail, which is what the second point is telling, the foundation of the strategy with discretion. Point number three, the upgrades I did over time. I'll also be talking about how I upgraded the strategy. I'll also be giving you mental framework so that you can also plan how to upgrade your strategy also over time. And finally, I'll also talk about results of my new system after I did the upgrades. Cool. Let's get started. Now, again, I see there are a lot of people here who know me already, but then there are also people who do not know me, right? So for people who do not know me, my name is Shariq Shamsuddin. I've been selling options. I don't say that I've been a trader or I've been doing that. I'm proud to say that I've been an option seller for the last 5 years, right? And for the last 3 years, I've been completely into it. I've been doing it as my primary activity. I've been trading for a long time now. But more importantly, I have YouTube presence. I have a Malayalam YouTube channel with 1.2 million subscribers. I also have an English YouTube channel with nearly 300,000 YouTube subscribers now, right? I also run a company. And you also saw my PNL now, so you know how I trade, right? Lovely seeing all the comments here. Amazing. I also run my company called Market Feed. And as Vignesh said in the introduction, we've been backed by Y Combinator, the world's largest startup incubator, right? We also raised a seed fund with which we are trying to build Market Feed as a platform. So with Market Feed, what we are trying to do is on Market Feed, we will be listing amazing option trading strategies. You can go to Market Feed, you can get all these trading strategies for free, and you can connect your FIRE's trading account to Market Feed. And with a single click, you can trade all the strategies. How amazing is that? Yeah, you can go to Market Feed. You can find out different back-tested, verified, profitable strategies posted by SEBI registered research analysts. You can see the strategies. You can select a strategy. You can connect FIRE's to Market Feed platform. Whenever there is a trade, we will send you a notification on WhatsApp. Whenever there is a trade, we will also send you a phone call. You just have to click a single button and the trade will be placed. And all you have to do is have a FIRE's account. If you have a FIRE's account, just trade for free. We won't charge you anything for the strategies. It is all free for you. All you have to do is have a FIRE's account and keep trading, right? So when you stick to a strategy, you will be getting signals or trades whenever there is even adjustments, trade entry, trade modifications, trade adjustments, trade exit, whatever is there, you will be getting an update even on WhatsApp, even on phone call. All you have to do is click a single button and the trade will be placed in FIRE's. As of today, Market Feed is exclusively partnered only with FIRE's. So yeah, since all of you have a FIRE's account, it will be amazing, right? It will be very easy for you to start trading. If you're interested, all you have to do is send me a mail, send me an email saying that you're interested to shariq@marketfeed.com, SHARIQUE@marketfeed.com. That is it, all set to go, right? Just send me a mail. Amazing. Now let's start going, right? Now let's talk about why option selling. Why option selling? Now, why option selling? Because I believe it is the easiest way to trade. Because you get to make considerably easy money without needing to have huge market knowledge, right? It's easier is what I'll say. So a lot of people are asking for the email ID. So I'll just repeat the email ID again. This Shariq, SHARIQUE @marketfeed.com. MARKETFEED.com. Shariq@marketfeed.com. Yeah, so someone has posted it. Yeah, thank you, Vignesh. Thank you very much. So it's in the chat section now, so you can look into that. Oh, it's not Market Free, Shabana, it's Market Free. Cool. Now let's get back to talking about why option selling, right? Option selling, as I was saying, I believe, is the easiest way to make high probable money. You can make consistent profits with not so much knowledge about the market, right? Now, let me put this simpler. In any other style of trading, you have to be absolutely right about the direction of the underlying. For example, I want you to read this. Where will Nifty go to versus where will Nifty not go to? You understand that? Where will Nifty go to versus where will Nifty not go to? So in any other trading style, for you to make money, you will have to be absolutely right about the direction of the underlying. For example, if you're trading in Nifty, you'll have to tell, hey, Nifty will go from 17,800 to 79,900. Then you buy Nifty and make money. Or you'll have to say that Nifty will move down from 17,800 to 17,700. Then you buy a put option or make money, right? Or you short Nifty futures and make money. But in the kind of option selling that we do, you do not have to be right on direction. I make money every week by having a larger idea about Nifty as to where Nifty will not go to. For example, for next week, I would say that, hey, probably Nifty will not go to 18,200. Most probably Nifty will not go to 17,500 on the lower side. And with this, I can make money. You understand? If I ask you, hey, where will Nifty go to next week? And if I ask you, where will Nifty not go to next week? Which is easier to answer? Which is easier to answer? Where will Nifty not go to is easier to answer. No. Next week, Nifty probably will not go to 18,200. Probably Nifty will not, on the upper side, Nifty will not go to 17,500 on the lower side. Easier to tell. With that easier to tell analysis, we can make money with option selling. Yeah. So that is why I think option selling is easier, more consistent in profit making, and amazing, right? So that's why I do mostly non-directional option selling, and with which I can make an income. So when your capital grows, when you're trading with 10 lakh of capital, and if you're making 3% profit a month, that is 30,000 rupees. 30,000 rupees is not bad, right? That too, you can trade passively. You can automate your trades. So you can do all of those and you can make 30,000 rupees or 40,000 rupees if you have a 10 lakh rupees capital. I think it is amazing. You can also look at it as you're growing your money at more than 30% per annum. If you try to compound that, right, your money is doubling nearly every 2 years. Every 2 years, your capital is doubling. So if you actually put a Google sheet or an Excel sheet, and if you actually extrapolate, you'll see that if you start with even 5 lakh rupees, you'll be sitting on top of a huge corpus in the next 10-15 years. That is the power of conservative, peaceful option selling. And that is why I do it. That is why I'm teaching you the same. And that is why I think that all of you should do it. Okay, now let us talk about the strategy. I know all of you have been waiting for the strategy. Let us talk about the foundation of the strategy. Now, Naresh has sent in a question. Let me quickly take this question and then move on to the foundation of the strategy itself, right? 1% per week can be achieved with intraday straddle and strangle on Wednesday and Thursday by a target of 0.5% per day. Why positional iron condor with overnight risk? Please, can you clear my doubt? Cool. I'll talk about that. Now, I would say when you trade positional, it is very peaceful. It could be done passively. Now, if you are to do a Thursday intraday or a Wednesday intraday or even Tuesday FinNifty expiry intraday strategy, I believe you'll have to sit in front of the system. You'll have to put in more effort, more screen time. You'll have to actively trade. Now, if you have the opportunity, if your life allows you to do that, then you can do that. You can diversify with the positional system. But whoever is going for a job, whoever cannot afford to sit in front of the system throughout the day, then positional trading is the best. You take a position maybe on a Tuesday or even on a Friday till Thursday. By Thursday, your position would have gone to zero mostly, even by Thursday morning. Maybe you will do 1-2 adjustments maximum in a week. You can put alerts in your system and go to your work. You can put alerts in your system and focus on your business. You need not sit in front of the system throughout the day. And that is why I started trading positional, right? So when you trade positional, it is more of passive trading. You can put alerts into the system and you can go and focus on your life. If you want to trade intraday, then you will have to be in front of the system. So it is a personal choice depending on your life, right? Cool. So now let's talk about the foundation of the strategy itself. Amazing. Cool. So the foundation is, now why I'm talking about the foundation is, this is what you should understand in your heart. This is the strategy which you can trade. I'm going to talk about every rule about the strategy. Now, once you understand the strategy, you can make it better over time if you want to. Otherwise, the foundation will also work. I'll also talk about later how to make the foundation strategy better. I'll be talking about that also. Cool. Amazing. So foundation is selling deep out of the money call and put options. We will never come near to the spot. But when you do this, risk management is critical, which I'll teach here. I'll also be teaching you risk management, money management. I'll show you the amazing beauty of money management. I'll prove with numbers that this strategy that we are talking about, this has a better than 1:1 risk reward ratio and a win ratio of over 70-80%. Okay, a win ratio of over 80% and a risk reward of better than 1:1. Cool, amazing. So you sell deep out of the money call and put options, and you buy deeper out of the money call and put options. Now this strategy is called, in the theoretical world of options, this strategy is called an iron condor. Yeah, the strategy is called an iron condor. Now, on the right, if you see, there are a few points which you should make a note of. We only do weekly expiry, number one. Number two, we do equal lots. How much ever lot you sell, same number of lots you buy. We do both call and puts mostly on most of the time. And then you should also know about the magic of credit spread. That is, when you buy an option above or below the option that you have sold, it becomes a credit spread. Your returns increase, capital requirement goes low, and your risk is limited. All the strategies that we do are risk-defined strategies. Whatever happens in the market, how much ever a gap up or gap down happens, what if there is a glitch with the broker, like it happened with the broker yesterday, if there is a black swan event which happens, whatever happens, our risk is limited. We will never lose 100% of capital. Now, there are a lot of people who, going by the books, who tell that, hey, option selling has unlimited risk. If you do option selling in the wrong way, yes, you have unlimited risk. But if you do it intelligently by hedging your position, then it is never unlimited risk. You can always limit your risk. And that is the kind of strategy I'm going to talk about. Cool? I hope you are understanding something. Basically, you sell a call, you sell a put, then you buy a call above your sell call, you buy a put above your sell put. I'll be showing it better, no worries. Cool. Now it comes as the next important matter here is the strike price selection. I mean, when I say, hey, you sell a call and you sell a put, people ask me, hey, Sharik, we know we have to sell a call and put if you have to become an option seller. But which call to sell? Which put to sell? Correct. That is where the larger doubt is. You don't know what strike to sell. I'll tell you that. Now, please read the first paragraph here, which is which strike to sell. I have made this very easy. Sell a strike in Nifty. Okay, I'm talking about Nifty only. We are only trading in Nifty here. So sell a strike with rupees 7 to 10 premium. 7 to 10 rupees premium you can sell. And where you have a conviction that Nifty will not go to, that conviction should also be there. Sell a call option strike with a premium around 5, 6, 7 rupees or 7, 8, 9 rupees. Sell that. And you should also have a conviction that Nifty will not go up till there. Similarly, which put strike to sell? Sell a put option with 7 to 10 rupees premium, and where you feel that Nifty will not go down till there. As simple as that. According to me, the way we trade, the way we sell options is pure mathematics. It's a game of statistics. You only have to need some mathematical edge to win in trading, is what I believe. So that is why today I'll be talking only about numbers. I'll be going to Excel sheet. I'll even show the money management and how the beauty of money management works out for you. So sell a strike of 7 to 10 rupees call option where you think Nifty will not go up till. Sell a put option where you think Nifty will not go down till with premium of nearly 5, 6, 7, 8, 9, 10 rupees, around 7 rupees. Okay, amazing. Now that is your sell options. Now which strikes to buy? Buy a strike 200 points away from the sell strike. For example, if you sell 18,100 call, buy 18,300 call. If you sell 17,500 put, buy 17,300 put. Cool. Whatever strike you sell, buy 200 points away, strike as your hedge. Cool. Now, should we actually go to a strategy builder and try to build out the strategy? I'll do that. I'll go to a strategy builder. I'll show you what all strike to sell and what all strikes to buy. So Marudesh Babu is also asking, away means above or below from the sell. On the call side, above, and on the put side, below. When I go to the strategy builder, you'll understand better. Okay. So now I'm going to Market Feeds in-house strategy builder. You can use any strategy builder in the market. I'm not promoting anybody. You can use any strategy builder. I'm not taking names also. I think Fires has also some strategy builder integrated into the platform. You can use that. You can use any strategy builder for that matter. Cool. There are multiple ones available in the market. So you can go, you can try building a strategy, right? So what did I say? So Nifty is at around 17,828 now. Okay, 17,828. Now I'm looking for a call option around 7 rupees. I see 18,150. So I see 18,150 and I see it is around 7 rupees. I do not go and directly sell it. I think about it. Can Nifty go up till 18,150 next week? What do you think? What do you think? When I think about it, I see 17,850 to 18,000 itself as a very big resistance for Nifty. And even if that is crossed, 18,130 around is the previous swing high, right? We can look here, we can go here, we can go to, I'll only select, this is Fires, by the way, as I said, I trade only in Fires. I'll go to daily analysis. So some analysis if you want to, otherwise you can purely trade it following what I said, right? So if you see, last time when Nifty had moved up, it went up till, see, 18,130 only, right? The previous swing high, if you see here, this is what I'm talking about. So here, last time when Nifty moved up, it went up till 18,135. Now, if Nifty has to move up next week, there are a lot of resistances here, right? 17,850 to 18,000 itself is a huge resistance. So I don't think next week, the chances of Nifty going up till 18,150 is less. And it has around 7 rupees premium. I think it is okay. Then I decide to sell it. And when I sell an 18,150 call, I will try to buy an option 200 points above it. 18,150, 200 points away is 18,350. So I'll buy that. Cool. Yeah. So Tejas Chaudhary is saying I get this error if I try to access a strategy builder. So this is an internal tool. I'm just using it for demonstration purpose. You can use some other strategy builder. Multiple ones are available in the market. You can use any one of your choice. Cool. So on the call side, it is sorted. Now let me move on to the put side. Let me see what has around 7-6 rupees. So when I look here, 17,450 has 8.75 rupees, 17,400 has 7.5 rupees. Thinking about it, where would Nifty not go to on the lower side? We can again go back and see the charts if you want to, right? So here, if you see Nifty has really been moving up the last week. So even if you look here, 17,500 to 600 is a really good support zone. So anything below 17,500, I'll be happy, right? Anything below 17,500, I'm happy to sell. So when I look here, I see 17,450 has 8 rupees 75 paise. It's good. It falls into my criteria. It should have around 7 rupees premium, and it is below 17,500 where I think it should be safe. Only 3 days left to expiry, right? Monday, Tuesday, Wednesday. And then Thursday as well, right? So let's try selling 17,450, and then I am buying something 200 points again. Cool. I'm adding to basket. Now, this is my strategy. See how much returns it is giving in the week. If Nifty, by the next Thursday, if Nifty is staying between 17,450 on the lower side and 18,150 on the upper side, I will make 1% ROI. I'll show you the range I am talking about. Right? I'm sorry that there are a lot of lines here. That's how I analyze it. So I am talking about a range of 450 somewhere around here till 18,150 is still here. So next week, this is what I'm talking about. So next week would be like only so many days. In the next 4 days, if Nifty stays in such a big range, we can make 1% ROI. Yeah. And in between, after taking this trade, I'll also give you conditions where we'll be adjusting the trade. I'll come to that. How to book stop loss, how to book profit, how to adjust the trade. If market allows, we might even make 2% profits. If market allows, we might even make 3% profits. If market goes against us, we might even lose 1% of capital as loss. It can also happen. So this is how we start the journey. We can find a 1% trade depending on whatever I said, and you enter into the trade. This is the trade as you can see here. But then when I go back into the presentation, there is a very, very important point here, which is critical. Make sure you note this down. This is critical to money management. What is the point? The last line on the stage, on the screen. Try to make sure you collect similar premiums from both sides. Very critical. Try to make sure you collect similar premiums from both sides, which means that from the call side and from the put side, the premium difference, which is the premium you collect, should be similar or almost equal. Okay, let's see what's happening here. Let's see what's happening here. See here on the call side, how much money are you getting? 7.7 minus 1.7, which means you're getting 6 rupees. The difference of the sell premium and the buy premium is your profit. So 7.7 minus 1.7 means 6 rupees. So from the call side, you'll get 6 rupees. Let's see what you're getting on the put side. 8.75 minus 5.25. That is what? 6, 7, 8. It's only 3.5 rupees. So from the put side, you're getting 3.5 rupees. And from the call side, you're getting 6 rupees. Not good. Money management will not work there. Again, very important. The last line of on the bottom side of the screen, you'll be seeing this, right? Try to make sure you collect similar premium from both sides. Now, how can you do that? Make some adjustments here. Let us see. Let us maybe move the put buy a bit away and move the call buy a bit closer. Now, let's see. Now, on the call side, you are getting 5.7 and on the put side, you are getting 4.7. And the overall returns is still 1.06%. Fine. Still fine. I hope you get the point here. First, you look into near 7 rupees premium. Then you form a conviction that Nifty might not go up till there or Nifty might not go down till there. Finally, you adjust the buy legs or sell legs a bit so that from the call side and from the put side, you're making similar returns or similar premium. Good. You can do that. I hope you're understanding. If that is the case, that is your strategy that you should deploy for the week. The next step to do is you have to go to an Excel sheet. Adjustment is not done. Mardish Babu, what you have to do is you have to make sure on the call side and on the put side, you should be collecting near similar premium. The difference between your call sell premium and call buy premium and put sell premium and put buy premium, both should be similar. Here you see 7.7 minus 2.05 is some 5 rupees 70 paise. 8.75 minus 4.05 is 4.705 rupees. Anup B. Joseph is asking, what about 200 point hedge leg? It's okay. You can, I mean, that is a blanket rule I said, but then you can move it around a bit. It could be 150 points away hedge or 250 points away hedge. But what matters most is from your call side and your put side, try to collect similar premiums. That will help in your money management. Cool. When to deploy? We'll get to that. When to deploy, we'll come to that. What is stop loss? We'll come to that. No worries. Once you do that, this is very critical. You have to go to an Excel sheet because ours is a pure notification based passive trading style. So you have to go to an Excel sheet and note down certain things. What is the call side premium difference that we are getting? Let's see. Call side premium was 7.7. See, 7.7 minus 2.05. Let's note it down. 7.7 minus 2.05. Cool. What is the put side premium difference? Yeah. So you have to track your call side separately. See, this is tracking your call side. This is tracking your put side. So call side, the premium difference you have collected is 5.65, and put side maximum premium difference that you will collect is 8.75 minus 4.05. 8.75 minus 4.05. The premium difference you are collecting is 4.7 rupees on the put side and 5.65 rupees on the call side. Now, depending on your capital, you have to decide how much lots you are going to trade. So this shows that if you are trading one lot each, see, one, everywhere it is one lot, then it requires a capital of 48,000 rupees. Say you are a person with 10 lakh rupees capital, then you can trade 20 lots. For the rest of the session, I'll be taking example of a 10 lakh rupees capital and I'll be explaining everything. So if you have 10 lakh rupees of capital, see, you can trade 20 lots everywhere. See, 20, 20. It's 20 lots everywhere. So the capital required is 9,75,000 rupees. 9,75,000 rupees is the capital required for trading 20 lots. It depends on you. So if everything goes well, you can make 10,350 rupees of profit. Yeah. So NR is saying maximum loss is 2,39,650. Yes, maximum loss can be 2,39,000 if you let it go there. If you do not know how to trade and if you let it go into loss, it will go till there. But we as intelligent traders, our job is to have a stop loss in the system to limit our losses. I'll teach about that also. No worries. I'll quickly come to stop losses. Cool. So now, what is the call side max profit? 5.65 you are collecting. Anyways, into what is the quantity you are trading with? 20 lots into 50. So maximum 5,650 rupees is the call side max profit. Correct? What is the put side max profit? 4.7 into 20 lots into 50 quantities. So 4,700 is the maximum profit you will make from the put side. You have to track both of your call side and put side separately. Maximum profit from call side is 5,650. Maximum side from put side is 4,700 rupees. Cool. Now getting back into the presentation. This is how our strategy will look like, right? You have a call sell, you have a put sell, you have a call buy and a put buy. Amazing. Now, when do you enter the strategy? A lot of people have been asking about this. When do you enter the strategy? You enter the strategy on a Wednesday only. Or you can enter the strategy on a Tuesday. It depends on you. I would say Tuesday to Wednesday is a good day to enter the strategy. For a Thursday's expiry, you're only having 1 or 2 nights of overnight risk and you're only exposed to so much of market movement. This is the foundation of the strategy. Morning. NR, either enter on a Wednesday morning or a Tuesday morning is also fine. You can even enter on a Tuesday. Even in my early days, this is the only strategy I used to trade. Depending on the market, if there was an event which was supposed to come out on a Wednesday evening, maybe I used to enter on a Tuesday. Right. So looking at the market, when I get a conviction, this is what I traded for 2 years continuously, no other strategy. I grew my capital a lot. I made good money only with the strategy. Entering either on a Tuesday or a Wednesday, looking at the market, selling a near 7 rupees call and put. I kept doing it. Entering the trade either on a Tuesday or on a Wednesday morning and holding it till Thursday evening. Cool. Entry is sorted. Sunil Gupta is saying the premium will be less. It's fine. Wherever you get around 6 rupees, 5 rupees, around 7, right? So it is 7 plus or minus 2, depending on where you have your conviction, right? You can choose not to look into anything else. This will work. I've been doing it for a very long time, right? I'll also tell you how to make this better by using Greeks, technical indicators towards the end of the session. Cool. So you can enter on a Tuesday or a Wednesday morning. What next? So this is the strategy. You go to a strategy builder and build out the strategy. You go to an Excel sheet and you record everything and you enter on a Tuesday or a Wednesday morning. Amazing. What next? Next is exiting the strategy. When do you exit the strategy? You have to exit. Now, after you enter the strategy, your call side and your put side, you have to track separately. This is critical to the strategy. Don't look at your combined P&L. Will never help you. Never look into your combined P&L, which Fires shows you. Okay? Always look into your call side P&L and put side P&L separately. Treat your call side and your put side as two separate trades. Okay? Treat your call side and put side as two separate trades. Cool. Now, only focus on the left side of the screen. Okay? Only focus on the profit side. There is a target to a side. When the other side is showing loss of 1.5 times of maximum profit, you book profit in the profit making side. I know it can be a bit confusing. I'll make it easy for you. Say you entered a trade, call, sell, call, buy, put, sell, put, buy. Nifty started moving down. When Nifty started moving down, your put side will start showing loss. When put side starts showing loss equivalent to 1.5 times the maximum profit it could have given, what will happen to the call side? It will be showing profit only. Correct? It will be showing profit only. At that point, book profits on the call side and sell a closer call. Sell a closer call. Again, something around 6 rupees, 7 rupees, and where you have conviction that Nifty will not go up till there. Okay? That is where this Excel sheet is again very critical. So when I wrote call side max profit, I also do a 5,650 into 1.5 is 8,475. That is where I have to book profits on my put side. If the call side starts showing 8,475 of loss, I will book profit on my put side and I'll move it closer. Or on the opposite side, if Nifty moves down and if my put side starts showing loss of 7,050 rupees, which is 1.5 times of the max profit, 4,700 rupees, my call side will be showing profit. I'll book profit on the call side. I'll move it down. Is this clear? I'll take some questions here to make sure you understand. You sell a call, you sell a put. You track their P&L separately. Okay. So Nifty is at, I'll go here. I'll actually take a case. A simple example I'll take. Nifty is at 17,500. Okay. You sell 18,000 call option. This is just an example. Okay. 18,000 call option sell and you have a 18,200 CE buy. Cool. And then you have a 17,000. I'm really sorry. Oh my God. 17,000 put sell. And what would we buy there? A 16,800. Oh my God, what's happening? 16,800 put buy. Cool. This would probably be your strategy. Just an example. Just taking an example, right? So here, assume that, let's assume this is the trade, right? So here we know that the premium difference we are getting is 5.65 on the call side and 4.7 on the put side. And it's a 1% trade. So just rounding off, you're making nearly 0.5% of your capital using the call side, nearly 0.5% of your capital from the put side. So what I'm saying is, you know that on the put side, the maximum profit you can make from the put side is 4,700 rupees. Max profit from the put side. Max profit from the, max profit from the call side is 5,650. 5,650 is the max profit from the call side. Now, you know this is the maximum profit you can get. Now you have to keep tracking the P&L of the put side and keep tracking the P&L of the call side. Say Nifty moved down, Nifty came down to 17,300 and the P&L of put side, the max it can go is 4,700. It started showing 1.5 times of 4,700 as lows. It started showing minus 7050. Okay, it is showing lows because Nifty moved down. At that point, what will the call side be showing? Out of 5650 to be which you can receive there, it might be showing some plus 2,000, right? Some 2,000 rupees profit will be showing. What I am saying is book the profit here. Okay, book the profit there. Cool. And book the profit there and then look into the market and sell a new call. 17,800 call sell. And you can also book this buy and you can take a new buy also. That's upon you. I will not talk about buys again. Whenever you're moving down the call, book whatever, which is exit this also, right? Okay, exit this and take a new buy. And the new buy will be 18,000 call again. So here you will be getting another 5-6 rupees of credit, or premium difference will be 5. Just an example, okay. Premium here also you'll be selling at around 6 rupees and the buy leg will be 1 rupee and 5 rupees premium difference you are getting. Another 5,000 around, just taking an example, okay. Max profit you can make around 5,000. You'll be in this trade. On the put side, you'll be seeing loss. You'll be in a new call sell. Call you have moved down. Now is this better? Yeah, Swapna is saying if put loss 7,050 and that time call profit maybe 3,000. Yeah, it might be even be 3,000. Let's take 2,500. Yeah, in between. So 4,000 loss overall. Yeah, don't look into overall loss. Only look into call side PNL and put side PNL. Track them separately. Very critical to the strategy. Track them separately. P leg will be bleeding. Yes, hold on to it. No worry. As I said, we are only discussing about what to do in profit. I'll also talk about what to do in loss. No worries. Okay? Cool. Range is becoming shorter. Let it become shorter. No worries. Cool. Now, what can happen from here? After the market moved down so much, our put is anyway showing so much loss. There is a chance that Nifty could go up. Nifty could go back to 17,400, then could go to 17,600. What will happen? At the end of the week, you are in good profits, right? You are making this 5,000 also your total get, right? You'll get how much? This 2,500 you'll get. This 5,000 you'll get. This 4,700 also you will total get. Oh my God. Got it? And the sum of that is yeah, 12,200. The capital was 10 lakh and the returns is 1.2% profit. If things go well from there, I'll talk about when things go bad. Okay. So Nifty moved down. The put side showed big loss in tunes of 1.5 times of maximum profit. At that time, we booked profit in our call. We moved down our call. Then Nifty went back up. Everything is fine. And then we book profits. What if Nifty goes back up so much? It went up to 17,700. Then this is showing minus 7,500. What will you do? Now the call side is showing 1.5 times of the max profit. What will you do? You will book profit here. By that time, almost say 3,500 profit is booked here. So you book your profit on your put side. Yeah. Sorry. Let's use the same color. Yeah. And then you move up your put. You sell, I don't know, this one, 17,300 put you sell. 17,300 PE you sell. You might get what? Some 4,000 rupees again there. Yeah. And if things go well, by the end of the week, the Nifty moved down again and came back to 7,500. Everything is fine. You get that 4,000 also. What happens? The week returns goes to 1.62%. This is where I said, if things go well, if our stop loss is not hit, there is a chance that you might even make 2% profits a week. Cool. I hope this is clear. What should you be looking at? Your put side PNL separately and your call side PNL separately. And if any of the PNL goes to 1.5 times loss of the maximum profit, then you book the profit on the profitable side and move it closer. Cool. I hope you understand this. Otherwise, again, you can contact me at sharik@marketfeed.com. I'll be happy to help you. Cool. Now, what if loss increases? What if your Nifty did not go up? Okay. Nifty kept moving down and down and down. I'll remove all this. I'll remove all this. You first made a modification. Nifty came down to 17,300. You booked your let me remove all this. Yeah. So what if Nifty came down to 17,300? This is showing minus 7,000. How much was it? Minus 7,050. So when you see that, wait, yeah. So when you see that, you move down your call also. What if Nifty did not stop here? Nifty kept moving down. Nifty came down to 7,200. When should you cut your loss? When should you book loss on your put side? When Nifty moves down again. At a point, let's go back here. If the loss on one side is 3 times the maximum profit which you could have gotten from that side, book the loss there. The chances for this to happen is very rare, but when it happens, book the loss there. Which means that when this reaches minus 14,100, which is 4,700 into 3. So when this side shows minus 14,100, you book loss there. Okay, you book your loss there. Fine, you book loss there. You lost 14,700. What will you do next? After booking loss there, I want you to sell a new put. Maybe a 16,700 put you sell. Cool. You book loss there. When that side's P&L shows a loss of 3 times the maximum profit from that side, book loss there. Fine. So at that point, what would happen here? In this 5,000, you would have gotten another 2,500 maybe. 2,500 maybe around. Maybe you wouldn't get so much. I'm just taking an example. So you book that profit also on the call side. You book that profit also on the call side. Maybe you can sell a new call and you sell a new put. And here you might be getting, now you're nearer to expiry, you wouldn't be getting so much. So you might get 3,000 rupees there. And this new 16,700 put sell, you might get 3,000 rupees there. Now from here, follow what you have been following again. Because you are in a fresh hand condor. Follow what you have been following again. Again, if Nifty moves down to 17,000 and if this goes to 1.5 times the max profit, then book profits in call and move down again. If this goes to 3 times, books loss there. Chances of which to happen is very less. Because Nifty wouldn't trend so much in a week. Maybe rarely, once in 6 months and all, it might trend so much in a week, 2 stop loss might be hit. Otherwise, it wouldn't be hit. So what happens here? By the end of the week, you will book 3,000 rupees profit from here. Nothing here. You're losing minus 14,100 here. And finally, let's paste here. Yeah. Here you're making another 3,000 rupees. Right? And let me take a sum of everything. Yeah. So after doing all the adjustments, even after one stop loss getting hit, all you are losing is 600 rupees with a 10 lakh rupees capital, which is 0.06%. Even after hitting an SL, which is very difficult to hit, for which market has to move a lot, even after hitting a stop loss, you will lose only 1% or under 1% profit of your capital. If you make profit, you can make 1% or above 1% profit. If you make loss, if you follow the system, if you book your SL, and if you keep moving, like I said, you will lose only under 1% profit of your capital as loss. So when you win, which is most of the case, 80% of the weeks you will win only. You will keep making 1% profit. 20% of the weeks when you lose under 1% profit. Isn't the money management amazing? Yeah. So follow the same, even if it is on the call side or on the put side. This is what you have to follow. When a side shows loss of 1.5 times of maximum profit, you book profit on the other side and move it closer. If the side shows loss, which is equivalent to 3 times the maximum profit, then cut the side and sell something new on the side, and the other side also you move it closer. You keep doing this for a good enough period of time, you will only get better. And I think it could only make profits, right? I mean, I actually did this for a very long time. Yeah. Right. So now let's talk about what can put us in trouble. Like Anandu is saying, V-shaped moves can put us in trouble. Yes. Big gap ups and gap downs will put us in trouble. Yes. But if you do it for a long period of time, it will be okay. I'll talk about February 2022, last week, Russia-Ukraine war. I lost 5% of the capital trading the exact same strategy. It happens. I mean, it is trading. It is not magic, right? Shit happens. There will be weeks, even though if you're following the system, some crazy things can happen in the market, some gap up, gap down, I don't know, whatever, some crazy V-shaped move. And there can be weeks where you lose 2, 3, 4, 5% of profit of your capital, but it's fine. All you have to do is keep trading it consistently. Most of the weeks you'll be making 1-2% profit, 1-2% profit. Some of the weeks you might lose 0.5% profit. You might lose 0.5% or you might lose 1%. Some extreme case scenario, you're losing 5%. But if you do it consistently for a long enough period, you'll make 30, 40, 50% a year. That is why I started with one request, right? I'll give a strategy, but do it for a long enough period of time. NR is asking, why not do strangle only and use rolling strangle? That is why I talked about the magic of credit spread. Read this, magic of credit spread. Higher returns, lesser capital, and limited risk. Lesser capital eventually means higher returns. ROI is higher for an iron condor, not a strangle, and your risk is also limited. I mean, it's our business at the end of the day. I really want limited risk. Why not do iron fly, which might have high risk reward? I don't want high risk reward, right? I mean, I want decent risk reward with high win ratio and high safety. I am optimizing for consistent and peaceful returns. I am in the business of option selling. I want to do it passively. The largest thing I optimize for is peace of mind. Peace of mind. Do it passively, make simple, consistent returns. Amazing. Swapna, yes, I have tried in FinNifty, I've tried in Bank Nifty, it works everywhere. Sunil Gupta is giving an example. I'm taking an example of 13 April expiry. Okay. In the evening of Tuesday, Nifty at 17,726 at 3:20 p.m. Sold 17,550, put at 865, bought 17,395, sold 17,900, call 61. Amazing. So can it will be not risk for gap up or gap down this much in Nifty? You could have actually traded that. I mean, forget back. This is what I'm saying. Whenever I talk about this strategy, everybody is concerned about gap ups and gap downs. But trust me, I've been trading this for a very long enough period of time. It has not been such a big trouble. Yes, I've been in trouble here and there, but in the longer term, you only tend to make money, right? So even in the last week, if you would have traded this, you would have easily made money. You sold what? Tuesday evening, you sold a 17,550 put and a 17,900 call. Look into the charts. You would have easily made money. No premiums would have spiked to an extent where our stop loss would have hit. I think you would have got one adjustments on the put side. You would have been able to move up the put side. You would have made more than 1% profit with that. Sunil Gupta. Yeah. Do we need to check P&L during market hours or end of the day to move or exit? During market hours, Marutish Babu, whenever during market hours, when the P&L of one side reaches 1.5 times the maximum profit, you have to move the other side. All you have to do is monitor the P&L. There are tools with which you can put alerts on your P&L also. You can do that. Finney Samuel is saying, great strategy. I'm doing this last 3 years. I am deployed with Tuesday 10 a.m. getting 2.5% weekly. Amazing, Finney Samuel. That's amazing. Cool. Oh my God, a lot of questions, right? So let me quickly finish the session. I'm almost done. I'll just finish it up, wrap it up, and then take more questions, right? So this is how you adjust. You all understood it. So this is the perspective that we are aiming at, right? 1 to 2% returns a week when you are in profit. When you are in loss, 0 to 1% loss. Profit making weeks, 1 to 2% profit. Loss making weeks, 0 to 1% loss. Amazing. That will take you to 50% returns in annum. Trust me, I've been doing this for a very long time. And again, you need not trust me just like that. You can try this with 1 lakh rupees capital. Try with 1 lakh rupees capital. I'm not withholding any information. You can follow this exactly the way it is. Try with 1 lakh rupees capital. Try for 4 weeks, which is a month, or maybe 3 months with 1 lakh rupees capital, and you only see the result. And you'll understand that this gives you peace of mind. This is fairly passive and you can make money. But in the beginning, it might take some time to get used to it, right? You have to look at the P&L, look at nothing else, right? Don't really be worried as to where Nifty is. You have to look at the P&L of the call side and the put side separately. So all of those might take some getting used to. But again, when you get used to it, it will be a breeze. Okay? Very less tension. I mean, when you're trading intraday, every 5-minute candle you have to watch in Nifty, you have to feel the tension. Hey, what's happening to Nifty? What will happen the next candle? Should I move? Should I adjust? Should I firefight? Nothing in our case. You are sitting far away on a Tuesday or on a Wednesday, or you can even start on a Friday if you want to. Now we start on Friday. This is the foundation I talked about. Now I start trading on a Friday. I sit very far away from Nifty. There are days where Nifty is going up 100 points, going down 100 points. I am 300, 400 points away. I don't even care on an intraday basis what the next candle will be. I don't have that tension. Someone earlier asked about that why don't do intraday, right? I mean, I do intraday as well, but when I trade positional, I have larger peace of mind. And that is what I optimize for mostly. And over the time, I did some upgrades to the system, which you can also think about, right? When I made upgrades to the system, my returns, in fact, increased. Number one, I made it into a system. I automated it. I started backtesting the system and I got major improvements, right? Number one, I am entering on Fridays now and I'm selling higher premium options also. I even sell 10, 12, 13 rupees premium options now and I start entering on Fridays. It's giving me better returns. I'm not telling that you should be doing it. I'm just saying the upgrades I did over time based on the foundation that we discussed. Whatever we discussed so far, the foundation is how you can start trading. When you start trading the foundation, you yourself will understand, hey, I could do this, I could do that, I can make the system better. And that is what I did. I traded the foundation for 2 years, 2 complete financial years. I made nearly 50% returns. Then I did modifications to it. I started entering on Fridays. I started selling higher premium options. I also introduced a logic where a week I might even only sell call option to begin with. Later, at some other point is when I'll sell put option. I have some other logic. I'm looking into option Greeks now. I'm looking into some technical indicators. So I've made it better. I've diversified between indices. I used to trade only in Nifty earlier. Now I trade in Nifty, Bank Nifty, and Fin Nifty. Finally, I also started looking at stop losses and targets based on option Greeks and technical indicators. Now, when I did this, I got multiple strategies. And I'm diversifying my capital or multiple strategies now that I have a large capital. But you need not worry about it. Why I am talking about the upgrades is the fact that when I traded one single strategy for 2 years, when I started understanding the strategy got into my blood. I started understanding everything about the strategy. Then I could find out multiple variations of the strategy. And with that, my trading got even better. You need not worry about that now. I'm just telling you a story here, right? I want you to worry about only the single foundation strategy we talked about today. Just understand the strategy, keep trading it. That is all you have to do. Now, if you need any help there, right, we are very happy to do it because this is the strategy, the statistics of the strategy when we backtest it. With whatever modifications we have done, the win ratio is 70%. Now I have optimized for higher returns also. If you see here, average profit of a winning week is nearly 2%. Average loss of loss week is 1.64%. This is one of the variation of the strategy based on the foundation. The foundation has even peaceful numbers. The average profit, I think, is above 1% and average loss is under 1%. But the overall returns will be around 35 to 40 only if you trade the foundation. But this is a modification of the strategy that we did, which can give even higher returns. Amazing. So that is all I have to tell, right? I mean, that's all from my side. I'll be taking questions now. I know I kind of overshot time. I'm about time by nearly 15 minutes. I'm sorry for that. But I think I convey the strategy again. All I have to tell us, you have to stick to a strategy. And not saying just stick to my strategy. It could be someone else's strategy or your strategy for that matter. But once you have a strategy and if you have a feeling that it works, or if someone tells you that it works, and if you can trust the person, then just keep trading the strategy for a good enough period of time. And that itself is enough, right? Now, how can you trade the strategy? Number one, if you understood it, you can go ahead, you can trade the strategy yourself. Number two, if you have any more doubts regarding the strategy, reach out to me. My email ID it is on the screen right now, sharik@marketfeed.com. There is also a WhatsApp number here. My team can help you, 9083222494. Yeah, you can either WhatsApp on this number, yeah, or you can email me directly. I can help you there. Or we also have MarketFeed as a product, right? So if you see here, this is MarketFeed product. It's app.marketfeed.com. So here, if you actually come here, you can log in with Fires. You only have Fires today. You can log in with Fires here. Yeah. Right. So my broker Fires is connected to MarketFeed. And whenever there is a trade, see, last week it was a meager profit, 0.13% profit only. Right. The week before there was a loss-making week. Then there was a 1.58% profit week. So whenever there is a trade, an option selling trade, we will send you a notification on WhatsApp. We will send you a phone call also. You're already logged in with Fires onto MarketFeed. All you have to do is click a single button. All your call sell, call buy, put sell, put buy, everything will be executed. You need not worry. All you have to do is come and tell here how much capital you want to trade with. Just tell how much capital you want to trade with. Say you want to trade with only 10 lakh. So 10 or 5 lakhs. Just tell, okay, you're trading with 5 lakhs and boom, your capital is set. Then we will, whenever there is a trade, we will send you a link on WhatsApp or we will send you a phone call. You just click a single button. We will not ask you anything extra to enter. We will not ask you to go through all the tedious process of, hey, enter the premium, enter the order type, enter the quantity to trade. Nothing. All you have to do is just click a single button because we are seamlessly integrated into Fires. We only have integration with Fires and no broker. That's the kind of association that we have with Fires, right? So that is the simplest way to trade the strategy if you want to, right? So again, my point is, I've given the strategy. Number one, you can trade it yourself if you want to learn and get better, right? Right. Number two, if you want to trade it in a much simpler manner, you can just contact us. Just send me an email at sharik@marketfeed.com. Tell you are interested. We can, as Marutish Babu is saying, algo setup possible with strategy. We can even talk about that. You can trade on MarketFeed by approving every single trade. We will make it happen for you. But this is the foundation of the strategy. I would urge all of you to learn better. At least, even if you are opting to trade with MarketFeed, right? Yes, Marutish Babu, even adjustment notifications send via WhatsApp. So whatever you need here, if you want to understand more about the strategy, if you want to trade the strategy, if you want to automate the strategy, whatever you need, you can just send an email, either telling just interested to Sharik@MarketFeed, or if you have any specific queries, you can send that also on the mail. But just one thing in the email, please mention your mobile number so that my team can get in touch with you. That's it. Vimal Dalal is asking, due to very low VIX, the premiums are very low nowadays. Is there any VIX criteria for deployment of the strategy? I mean, one thing that we looked into was we never traded the strategy above a VIX of 30. Otherwise, it's fine. Even in the low VIX environment, we are still making money. It is fine. So yeah, that's it from my side. Anandu, yeah, good to know. Anandu S here is from my hometown. Yeah. So that's it from my side. I mean, I've given a strategy. Now, anything related to it, I'll be happy to help. Just reach out to me or my team to learn more about it, to deploy it. Everything is doable. So looking forward to trading you on the strategies and you becoming good traders. That is why I think even I've come here, even Fires us organizing such sessions, not just with me, right? Fires is doing a beautiful job of bringing multiple people from the industry to take sessions here. Why? Because we all want to see you trading better and making consistent profits, right? That's the endeavor that we are all in. So looking forward to that. Thank you very much.
Thank you so much, Sharik. This was a very valuable session. It's so insightful, and we still have so many comments and questions pouring in. And your expertise, your knowledge has been truly enlightening in the session for us. And viewers, as you had already seen the WhatsApp number as well as the email ID for Sharik's team, so I would suggest you get in touch with them should you have any further questions. Also, I'm excited to share some news with you. So, following Sharik's suggestion regarding NRI DMAT accounts, we have reduced brokerage rates by 50%. This is a significant step towards making trading more accessible for those living abroad. And
Absolutely. I mean, that's a really great step by Faiz, I'd say. I mean, it's definitely much better than industry standards, I'd say. At least for NRIs now, it's a no-brainer. If an NRI would love to trade with an NRI account, then Faiz is the only option to go with.
well, the
Amazing.
credit goes to you for suggesting the idea to us, Sharik. Thank you so much for that. So please, viewers, do spread the word. Let your friends and family know that this is the perfect time to start trading with Faiz. Once again, thank you all for joining us today. We hope you found this webinar informative and engaging. Don't forget that you can watch the session again on the Faiz YouTube channel. Until next time, happy trading with Faiz.
Yeah. Thank you, everybody. Bye.